Hello, everybody. This is Bennett Tchaikovsky, and welcome to another problem walkthrough. This is problem 4-4, and so let's kind of go through and take a look at this one. So this is a little bit different. We're being asked to prepare multiple and single-step income statements. I'm really going to be focused more on the, essentially over here on the multi-step income statement, because I think that's a little bit more important. And then we will go through and then take a look at the multi-step income statement, and then we'll also do a statement of retained earnings. Okay, so let's go ahead and start with our account heading. So we've got Twain Inc. income statement, multi-step for the year ended 12/31. Or excuse me, it's 6/30/20. Okay. So over here, I've got my sales revenues. So my sales revenues were $1,578,500 less sales discounts. So $31,150. And then also over here too, what I'm really looking for is I'm trying to get to net sales. What is net sales? So if this is something that you haven't seen in a while, it's covered in inventory. If you were taking financial accounting, one of the things that I would have my students do is to do a multi-step income statement. And when you're in that chapter specifically, you have to kind of go through and say, okay, here's my sales revenue, less sales discounts, and then less sales returns and allowances. My sales returns and allowances are $62,300. So my net sales is going to be my sales revenues, less the sales discounts, less the sales returns and allowances. From net sales, I'm going to go ahead and subtract out my cost of goods sold. Okay, that amount here is $896, $770. And this is going to give me my gross profit. Okay. So once we've done this, now the next thing I need to do is less selling, general, and administrative expenses. Now for this one here, you can probably just kind of look at this and say, okay, the more important one here are the selling expenses, because we want to understand what did it cost to support these sales from a sales perspective. So our selling expenses, okay, let's just kind of go down the line. So we've dealt with sales revenues, discounts, and cost of goods sold. So we've got here salaries and wages. Expense, this is $56,260. Sales commissions is $97,600. Travel expense for salespersons. Delivery expense, yeah, that's a great one. That's also going to be a selling expense. Delivery expense is not included in cost of goods sold. Entertainment expense. So I would assume that the entertainment expense relates to the salespeople. So my entertainment expense was $14,820. Over here, my telephone and internet was $9,030. My depreciation expense for sales equipment is going to be $4,980. Maintenance and repairs, again for sales, was $6,200. Okay, miscellaneous selling expenses was $4,715. And in terms of office supplies, I'm not going to assume that that was in fact used by the sales department. So go ahead and we'll, if there's anything else here, bad debt expense. $4,850. Property tax is going to be general and admin. That's going to be admin. Office expense is going to be general and admin. Sales returns and allowances we've already dealt with. That's going to be something that we're going to be deducting to get into sales. And then over here, dividends received, that's going to be other income, interest expense, other income expense, income tax expense, error, that's going to be retained earnings. So my total selling expenses are going to be $248,795. A lot of students ask me, like, why do you go through over here and indent? The reason why is because if I'm indenting this, then you kind of know that it means that I'm adding something up, right? So here, so this is a sum of all those different items here. Okay, so my general and administrative. Or you just call them as selling, just call it administrative. I would accept either. Okay, so let's go through here. Delivery, we've dealt with. Sales, office supplies used. $3,450. Telephone and internet. And by the way, why is it really important to keep track of these things separately is because if somebody's being compensated based on their expenses for their department, it's always the way you want to kind of go through and do something. So over here, depreciation expense. $7,250. Property tax expense. $7,320. Maintenance and repairs, admin, $9,130. Office expense, $6,000. Sales returns and allowance we've already dealt with. And then over here, so I think we're going to be good on this. Okay, so my total selling and admin is going to be $248,785 plus $35,970. So my income from operations is going to be my gross profit minus my selling and administrative expenses, or $303,525. From this right here, what I'm now going to go through and do is less other income / expense. So let's take a look at our other income and expense. So we had over here, let's see, dividends received. $38,000. Interest expense, $18,000. That is a negative. And I think that those are only two items that were impacting us that way. So our total other income expense is going to be $20,000. So our net income before income taxes is going to be the $303,525 plus this $20,000 here. And now I need to do what is my income tax rate? It actually just tells me what the income taxes are. My income tax expense is $102,000. So my net income is going to be $221,525. So for my earnings per share for this one, remember that it's going to be net income minus preferred dividends divided by the weighted average shares outstanding. Okay, the net income after tax is $221,525. My dividends declared on preferred stock is 9,000. Dividing this by my weighted average shares of outstanding of 80,000. So when I take 221,525 minus 9,000, that gives me this. So then my earnings per share is going to be roughly $2.66 per share. So this is my earnings per common share. Okay, so that's the multi-step income statement. Now let's take a look at our statement of retained earnings. So for our statement of retained earnings, we would go through and do the same thing. We would create a header. Just going to move this things around a little bit here. Okay, so I got Twain Inc. Statement retained earnings for the year ended 6/30/20. So here I'm going to start out with my beginning retained earnings. Okay, so my beginning retained earnings for this particular question was $337,000. Now, when I'm doing my statement of retained earnings, what I'm going to first want to do is to say, were there any types of prior period adjustments or the like? So right over here, it's telling us that my depreciation was understated due to an error by 17,700. What that means is I did not take enough. So what I need to do is I need to subtract that from my beginning retained earnings. So it's going to be my beginning retained earnings as adjusted of 319,300 plus I'm going to add in my net income. My net income over here was $221,525 less my dividends. So I'm going to subtract out dividends on preferred stock, common stock dividends. Remember, it doesn't matter if it's been paid, it's just a matter of whether it's been declared. Okay, so my ending retained earnings is going to be my as adjusted plus the net income minus the preferred dividends less the common stock dividends of 494,825. So that is problem 4-4. I hope you enjoyed this video as much as I did because I enjoyed it. So if you have any questions, I look forward to seeing you in class and talking about this, and I will see you on the next video. Have a great one.